Why are you sticking with a $180 price target on this stock? I mean, you've been largely wrong for the past better part of 2 years, I'll say.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, I'm reacting to some comments from a stock analyst who just simply cannot get his head around Tesla's valuation. We are, of course, talking about Tony Sacconaghi with a $180 price target on Tesla stock. That represents a whopping 75% downside from where we are today. So let's try and understand exactly where Tony is going so wrong. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to Webull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with Stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
Tell me what you think is going on in China, where it's a more competitive market perhaps than we have certainly here in the US, maybe even in Europe, and you're seeing what? That they're starting to export out of China, meaning they don't have a great growth trajectory there?
Yeah, so the question that we received most frequently following earnings was, Tesla's overall revenues grew 10% from the first to the second quarter. China revenues were down by about the same amount. And unlike the US, where Tesla has been raising prices, Tesla introduced a dramatically lower priced Model Y in China, about $11,000 lower in July. And they also cut price on their Model 3. So, the question is, why does this seeming dichotomy exist between what's happening in the US and what's happening in China? And that's really what we were trying to address today in our note. And the punchline, I think, as you suggested, is ultimately that the Chinese market is dramatically more competitive. There are over 100 domestic EVs being offered in China today. There are only about 9 US domestic EVs being offered in the US today. And so Tesla last year had 60% EV market share in the US. It only had about 16% market share in China. And so we have a level of competition for EVs in China that is much more advanced than what we have in the US.
So there is absolutely no question that the electric vehicle market in China is far more mature than the US EV market. There are many more so-called competitors for customers to choose from when selecting an electric vehicle in China versus the US, keeping in mind, however, that the vast majority of these so-called competitors to Tesla in China are cheap pieces of crap. At this point in time, it doesn't matter whether you're talking about the US, Europe, or China, Tesla does not have any competition. There are other electric vehicles on the market. But when you look at the price, performance, features, functionality, especially safety, nothing else comes close. So certainly there's going to be a lot of consumers that are willing, especially in China, for example, one of the best-selling EVs month after month after month is a $5,000 death machine on wheels with practically no safety features. This is not competing with Tesla. However, the statistics would tell you otherwise. It looks like it's taking away market share from Tesla's Model 3, Model Y, etc. But the kind of consumer buying a $5,000 death machine on wheels is never the kind of person that's going to be buying a Tesla in the first place. I think a lot of people tend to overcomplicate things, thinking, oh no, the competition. The main thing to ask yourself is Tesla selling every vehicle they make? If the answer is yes, well, you don't really need to concern yourself too much with the so-called competition, do you? Another way to look at things is Tesla's share of the vehicle market in the US and Canada, Europe, and China. What we can see here is an exponential growth curve in all 3 of these markets. We're at the very early stages. This will continue over time. It doesn't really matter how many new competitors are being introduced in China, Europe, doesn't matter. The only thing that matters is Tesla increasing the number of vehicles they're selling quarter over quarter on average. If the answer is yes, well, that's all we need to concern ourselves with.
You do say in the long run you think Tesla's capacity will be absorbed as the Chinese market continues to grow. Why is that?
Look, the EV market today there are only about 3% of all cars sold today are electric vehicles. We believe globally by 2040 it will be 75%.
Oh God, this is not going to age well. It seems like there's some people that are just stuck in this box and they cannot grasp exponential growth. S-curve adoption rates on new technologies. But, forget all that. Okay, maybe this guy doesn't understand that. Maybe his research team just don't get exponential growth. Maybe they're relying on estimates from people who have a terrible track record of predicting these kind of disruptive technology adoption rates. But let me just ask you guys and girls a question, okay? Assuming that battery costs continue to decline predictably, which they are, and assuming that Moore's law also comes into play for every cumulative doubling of production of electric vehicles, there's overall cost declines as well. Assuming that companies like Tesla can continue to innovate in the manufacturing processes, reduce parts and processes, therefore drive the cost down further. And assuming that we're only 1 or 2 years away, maybe 3 years at worst, from electric vehicles being cheaper for consumers to purchase at purchase price, never mind having much lower overall cost of ownership. How in the f*** can anyone with a straight face think that by 2040, just 3/4 of the new vehicle market will be electric? There will be no automotive manufacturers in business who are still producing ICE vehicles at this point in time. They'll all be dead because no one's going to be buying them. Holy f***, honestly, do these people seriously not understand that the cost of the most expensive thing in these vehicles, the battery, is declining predictably over time, and that electric vehicles are a new technology? They're not yet mature. They haven't ramped to scale. We're not seeing the economies of scale driving costs down overall. Oh God, dude, all right, okay. Tony, I hope you're watching. I hope someone from your team is watching. Please do some homework here, okay? You really need to understand this. The economics actually matter a lot. It's only a couple of years away until EVs are cheaper to buy for consumers than an equivalent ICE vehicle. We're just a few years away from that point in time. They're already cheaper to own over the lifetime of the vehicle. By mid this decade, it won't make any financial sense for consumers to buy ICE vehicles. The only consumers who will be buying ICE vehicles mid this decade and later are consumers who are so dumb that advertising actually works on them, and the companies in the process of going bankrupt who were making ICE vehicles and were too fucking stupid to realize they needed to transition to EVs as fast as possible are still trying to sell ICE vehicles as they slowly go out of business by advertising to this half of the bell curve.
So the EV market is going to have tremendous growth, and Tesla will benefit from that. And right now, Tesla, may have built more capacity than it needs in China, in part because the Chinese market is very competitive and it's in its early innings of adoption. But clearly going forward, we're going to have much more EV demand in China and globally, and Tesla will participate in that. I think our contention is that, the Chinese market will be more competitive domestically. There is a risk that the Chinese government may, over time, put in place policy that may be favorable for domestic manufacturers. But Tesla will still benefit from the tailwind of rising EV adoption in China and in other geographies over time.
I agree with everything Tony said there. Tesla will continue to sell out all their capacity in China and globally, and the EV market is going to see substantial growth in the future. However, as I mentioned earlier, Tony's estimates for how quickly the EV market is going to grow, way off the mark, way too conservative, embarrassingly so.
I mean, if we're talking about an EV market that's going to experience tremendous growth, whether it's in China or really globally in general over the coming years, why are you sticking with a $180 price target on this stock? I mean, you've been largely wrong for the past better part of 2 years, I'll say.
Hey, hi, it's me. I don't really know how to do gentle or subtle, but I just need to correct a little statement there that we heard from the anchor. This is Tony's tipranks.com profile. As you can see, he's a relatively competent analyst, probably somewhere in the top 20, 25%, somewhere thereabouts. So decent. We're looking at Tony's ratings on Tesla stock over the past 5 and a little bit years. As we can see, from early 2017 all the way up until mid 2020, had a hold rating on Tesla stock. Just to give you guys context, that entire time I was buying Tesla stock, then flipped to a sell rating as Tesla continued to head to the moon. Average profit on Tesla stock, negative 53.9%, with a 25% success rating on Tesla stock. For example, here you had a sell rating, then Tesla went down. That's counting towards some of the success. 58 total ratings on Tesla stock over more than a half a decade period, 0 buy ratings in that entire time. And as we can see, $180 price target representing 75% downside from where we are today. So with more than a half decade of history in terms of Tony Sacconaki's rating on Tesla stock, I think it's fair to say that his understanding of Tesla stock sucks harder than a vacuum. Or your girlfriend. Take your pick.
Yeah, so I mean, we lowered our rating to an underperform last summer. So prior to that, we were neutral on the stock, and clearly that was not the right call.
Have to commend Tony here for his honesty, admitting that that was an absolutely terrible call on Tesla stock. A lot of analysts would just try to justify, oh, well, the stock market doesn't make sense. It's not my fault that people just keep paying too much for this stock.
I'd say in the last 10 months, actually being underweight the stock has been value creating for most investors. Now, as to the price target and our belief in Tesla, our belief in Tesla is not that, you know, the company is not going to be highly successful. It's really all about valuation, and I underscore that there's a difference between a great story and a great stock. Tesla is a great story. We're not sure it's a great stock. The market capitalization is $700 billion. It's worth almost as much as all traditional auto manufacturers combined.
Here we're starting to understand why Tony has had absolutely no idea about Tesla stock for more than half a decade. Reasoning by analogy. Comparing Tesla to other automotive manufacturers. Mistake number one. Fuck other automotive manufacturers. Fuck other industries. Reason from first principles, from the ground up. Understand the business intimately. Forget what other automotive manufacturers are worth. It's completely irrelevant. Look at Tesla as its own entity and reason from there.
They make 80 plus million cars per year.
Okay, so putting aside all of the other aspects of Tesla's business today and in the future, let's just talk about the automotive business. This is a terrible way of reasoning. Tony's basically saying they make 80 million horse and carriages every single year. Tesla only makes 800,000. See, Tony's failing to understand that what Tesla's producing, their electric vehicles are not the same technology. They're not the same thing. Yeah, they have wheels. On the outside, they look kind of similar, but that's where the similarities end. This failure to understand that what Tesla is producing is not comparable to what the automotive manufacturers make today is a huge mistake and a big reason why Tony has no idea what he's talking about when it comes to Tesla stock. The other thing we need to talk about is the stock market. See, the stock market is forward-looking. No one in the stock market gives a flying fuck what's happening today. Valuations aren't based on what's happening today, but the future. This is why companies that are growing really fast have high multiples and higher valuations. Companies that are growing slowly or even worse, shrinking, have lower valuations. And as I've said 4 quadrillion times on this channel, all of the legacy automakers on average are going bankrupt this decade. Some of them are going to be acquired, some will merge, most will be out of business. A couple will make it through to the end of their decade, but they'll be a fraction of their former selves. This is also being factored into their current valuations.
Tesla will make 800,000 or 900,000 cars this year. They generate billions, tens of billions of dollars in cash flow today. Tesla may generate tens of billions of dollars in cash flow in the future. So our valuation is simply a projection, and we think Tesla may sell 8 or 10 million cars per year between 2040 and 2050.
Holy shit. So let me get this right. In 30 to 40 years, they're expecting Tesla to be selling 8-9 million vehicles per year. Let's do some quick math here, Tony. Just bear with me here. Berlin, Tesla have told us 2 million capacity over the long term. We're at 2 million. Shanghai, 1 million. We're already at 3 million. Austin, bigger than Berlin, bigger than Shanghai, probably 3 million. That's a total of 6 million units worth of capacity already, not including Fremont. So basically what Bernstein are expecting is that between now and 3 or 4 decades into the future, Tesla might build 1 or 2 additional factories beyond what they've already got under construction or currently ramped / already fully ramped. Whose ass are these numbers being extracted from? Seriously, what planet and in what solar system are these clowns living? I mean, honestly. They really think that in the next 3 to 4 decades, Tesla might announce 1 or 2 more factories that we don't already know about. I can't deal with this.
But those are cash flows that investors will be getting in the future. So again, I underscore that our underperform rating is not because we don't think Tesla will do well. We believe our job as a research analyst is to evaluate stocks in the context of their valuation relative to their fundamentals.
You know, Tony, and I get that, but I bring this up a number of times recently because it may be informative. I can remember people looking at Amazon many years ago and saying, well, it's larger than the entire market for books. You know, lack of imagination, perhaps, lack of understanding of all the different things that platform was going to enable Amazon to actually do. Whoever thought of AWS, for example? Isn't that perhaps a similar argument that could be made for Tesla in terms of all the businesses that it may be able to move into, whether it's autonomous, whether it's solar, whether it's energy production, that you are failing perhaps to account for?
Absolutely, David. I think that is the right question to be asking, and I think that is the bull bear debate on Tesla longer term is if Tesla is largely an automotive company, I think even bulls would concede that the stock is very richly valued. I think bullish investors would say Tesla is a platform. It's not going to be a car company only. It will be an autonomous driving. It will be a ride-hailing company. It will have energy storage business and a solar business that will be very significant. And it'll be the one company that can integrate all of those together.
So credit where it's due, Tony at least has the awareness of what would need to happen in terms of Tesla for their valuation to make sense now and for there to be strong future growth ahead. This is good. He's not completely ignorant. He just cannot possibly believe that this will actually take place.
And that is ultimately the most important debate. Our contention is that most of the value that you would ascribe to these scenarios would largely be through high software attached, largely in terms of full self-driving sales. And I think if Tesla were able to sell full self-driving for most cars at $10,000 a pop over time, its valuation would be deserved and potentially too low.
Now, this is a big insight. Despite the fact that these guys think Tesla's only going to be selling, 8 or so million vehicles per year in a few decades' time, their thesis, their current valuation hinges on the belief that they don't think it's possible that Tesla will be charging or making $10,000+ of pure profit per vehicle sold in the future. This is what their thesis really hinges on.
I think our contention is over time, Tesla will not be the only car company that offers full self-driving. And Tesla nor anyone else will be able to charge $10,000. 15 years from now, that may be $2,000, in which case it's more difficult to justify the valuation.
Understood. And a conversation that I know we will continue. Tony, thank you.
On this particular point, I beg to differ. Now, of course, everybody has their own opinion on this. It is possible that full self-driving software becomes highly commoditized over time, but I'm not expecting that Tesla's going to be selling this package for $10,000 per car in the future. Instead, I think people are going to be subscribing monthly. If you guys didn't catch my video on my predictions for Tesla stock in 2031, 10 years time, I'll put a card in the corner. I ran through all the numbers in great detail in that video. As you guys should probably know by now, I do read all your comments, and I noticed on yesterday's video, some of the most common responses in terms of my full self-driving predictions. There's no way people are going to pay that much. That's ridiculous. Now, my suspicion is that the majority of people saying that no one in their right mind would pay $200 per month for a fully autonomous vehicle are almost certainly broke-ass motherfuckers. And I don't say this with any disrespect. I've been a broke-ass motherfucker. When I was a student, I would wait hours to get a free bus home rather than paying for a taxi. I literally flat out refused to pay for taxis at all ever in my 20s, except when I needed to get to the airport and it was the only means of transport available. So I've been there. I understand the mindset. But there's two things we need to talk about. The first is if Tesla has solved autonomy, you can actually own a Tesla, pay for full self-driving, and then send the Tesla out to autonomously make you money while you sleep to help subsidize the cost of having the software that can send the taxi out to make you money while you sleep. You see where we're going with this? And irrespective of that, which by the way, that is a game, set, match point. We don't need to have any further discussion. But just for those of you who are still a little skeptical, you can't kind of wrap your head around the idea that a Tesla could go out and make money and actually pay for the cost of the software that you're paying for in the first place. $200 a month. That's like $6.66 a day. That's like 1.5 coffees per day. To have a fully autonomous vehicle that can drive you safely from point A to point B, freeing up your time and attention to do anything you want. Another way to think about this is how much do you value your time at per hour? We can think about this in two ways. How much you would pay to free up an hour of your time, or alternatively, a much more simple and applicable example to most of you watching, how much can you earn in an hour? Let's play along at home in a hypothetical scenario. Let's use some nice, round, easy numbers. Let's assume that you're somebody else's bitch, aka you have a job, and you make $1,000 per week. You have to go into the office, you work 8 hours per day. Just imagine that you're commuting 1 hour each way to your job. I know for some of you, like, dude, that is so much time. For others, this is actually a big underestimation, depending on what cities in the world you live, depending on traffic, etc. Let's just say that you're spending 2 hours per day commuting to and from your job. That's 10 hours per week. And let's say that you make $1,000 per week at your job. If you're working 40 hours a week, that means that you're earning $25 per hour. Just imagine if instead of wasting 2 hours a day commuting, you could actually be engaged in doing your job, saving yourself 2 hours at the office every day. In other words, those 2 extra hours per day, that's worth $50 per day in your pocket because of the time savings. You can now do your job for 2 hours a day while you're going to and from the office rather than just sitting there wasting time driving. In this scenario, full self-driving would pay for itself more than 4 times over in a single month. Maybe your commute's half as long. It'd still pay for itself twice over in a month. Now, I suspect there will still be some people that just can't wrap their head around this concept, but I personally believe that there is a very large portion of people on planet Earth today who would happily pay a few dollars, $200 a month to free up a huge amount of time by no longer needing to pay attention when they're driving their own vehicle, but instead having an autonomous vehicle that can safely get them from point A to point B, freeing up their mind, their cognitive faculties to do whatever they want, whether that's infotainment, entertainment, productivity, or anything else in between. I could come up with another 420 different hypothetical scenarios here, but just one final one to try to illustrate this point from a slightly different angle. Just imagine that you're a family of 4 and you're planning a holiday to Disneyland. You've got the choice of flying. It's going to be a 2-hour flight. That's 4 airline tickets for the family. Of course, the 2-hour flight, you've also got to get to the airport at least an hour ahead of time. Then there's going to be time getting your bags, blah, blah, blah. Let's call that a 3.5 to 4 hour trip, plus a huge expense of all the tickets. Plus, of course, you've got to get a taxi to and from the airport, or you've got to pay an enormous amount to park at the airport, then get a rental car when you get to your destination. Or alternatively, you can all just jump in the car at night, set the autopilot to take you to Disneyland, go to sleep, wake up 8 hours later, and have saved an enormous amount of money and had the privacy and convenience of sleeping in your own vehicle, traveling together as a family, not having to go through the airport, and still having your own vehicle for use when you get to your destination. The point I'm making here is pretty simple. There is far more utility to a fully autonomous vehicle that can not only transport you safely from point A to point B, but also autonomously make money for you while you sleep by driving other people from point A to point B than a lot of people seem to realize. It's not about cost. It's about value. This is why I'm willing to pay your mum $1,000 an hour every time we hang out, because she's worth it. Whoa, relax guys, relax. I'm just kidding. She's the one who pays me. And now back to the topic at hand, Tesla's valuation. Let me ask you guys a question. Let me know in the comments below. Do you think Tony Sacconaghi will ever see the light and start to understand Tesla? Do you really think that he's going to stick with his $180 price target indefinitely, continue to be wrong for years on end? Or is he finally going to wake up one day and go, you know what? They're not just an automotive manufacturer. They are going to reach 20 plus million vehicles per year, and they are going to have enormous software margins in the future. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with Webull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.